Welcome to Dave and Dharm Demystify, a FinTech Futures podcast, helping make sense of the world of FinTech and digital finance. Please sit back and listen as the two Ds take a subject and discuss it to make it clearer and easier to understand.
Demystify.
Welcome everybody to the Dave and Dharm Demystify show, and this week we have Ben Goldin from Plumery. Welcome, Ben.
Thanks so much, Dharmesh and Dave. Thanks for having me.
For the benefit of the audience, do you want to give a bit of background about yourself? I know you have a very interesting background. Also, let us know what Plumery actually do.
Sure, absolutely. By background, I'm product and tech person in banking. I've spent a bit more than 20 years building innovative financial products and technology. I guess the most interesting experience is being a CTP of Mambu prior to starting Plumery, but also, should I say, incepting the Backbase digital experience platform in a role of chief architect back in 2014, I believe, or 13. What we do right now at Plumery, we're taking a different approach to a digital banking experience, basically looking at all the lessons learned as part of my Mambu time, but also obviously at what I did at Backbase, but frankly also looking at how digital experience evolved since my first time touching that area in 2003.
Cool. And I too have been a competitor actually of Backbase and in the digital banking space. And Dave and I go back like to 97 when we were launching banks online for the first time. But I guess since I left Temenos, I have not necessarily kept up to speed with kind of digital banking. But in the past, it was very much a channels thing about internet and mobile banking. Certainly, when you arrived at Backbase, I was at Temenos and we were creating out the digital banking engagement platform. So what do you feel has changed and why have you done Plumery, I guess, in a bit more detail? Like what's the driver here and what's the opportunity?
Sure. The change is driven very much by how overall consumption of digital services changed. So if we look at how internet and mobile banking looked like back in 97 or 2003, when I started doing that, typically it was just part of core banking companies, right? Just an extra rudimentary service provided by core banking providers, typically quite mediocre, giving basic services. Some went a little bit further, provided quite a lot of services, but still, it was just a appendix to a core banking system. Then when we started doing that at Backbase in 2013 or 14, the realization was that, hey, digital is taking completely different place in overall consumer world, right? Products are becoming digital first. Expectations are completely different. And it's not enough to just do digital banking just as a side function of core banking. It needs to take its own place, right? It needs to become a first-class citizen. And hence, separate platforms that were focusing just specifically on digital banking experience started to emerge, right? Backbase was one of the first ones in that space, or even potentially even the first one really that was focusing just on that, right? And I'm happy to take a credit in being part of that. And that was immediately recognized by consultants, by advisory companies, by Gartner, Forrester Wave, and others. So there was definitely a need for that. Now, the way it was still designed to sit on top of core banking system, a single core banking system, and basically expose core banking functionality, plus potentially some content management function. I think where it evolves later is much more a hybrid between an ecosystem play, a combination of services provided by third parties, lifestyle banking capabilities, things that are unrelated really to banking, seamlessly combined with a banking experience, but now also on top of not just one core banking system, but a multiple core banking or product ledgers, each doing specific job in the best possible way. And once again, this is driven really by overall shift in what consumers expect, right? And shift in how digital products needs to be built today, but also shift in how banks and financial companies are looking at their overall enterprise architecture, transitioning from a single core architectures to multi-core architectures, side cores architectures, doing progressive modernizations, and all these things that are much more mainstream today.
I mean, it's really interesting because Dharmesh and I met 30 years ago. He followed the path of technology and I followed the path of experience. So I ended up having I think it was the first digital agency focused on financial services firms in the UK. And we talked to Backbase. And it's kind of interesting what you're saying, because I thought we would get along famously because we were an experience business and there was an experience platform. But what I've pretty quickly realized was the foundations of Backbase were actually in the kind of technology itself. And we were really like, well, how do we shift the experience? So we were working with companies like HSBC to think about how we shift the experience. And it proved to be quite a tricky thing to do because of, I guess, the sort of legacy thinking from a kind of technology point of view. And it's only now that I'm starting to kind of look back on the industry and go, well, look, the way things have evolved and changed, you could really drive from an experience point of view, because ultimately you have to. And things like generative AI and some of the new moves by people like OpenAI really are about kind of pushing from the sort of experience backwards. So it's kind of interesting that you're here at this point and what you're kind of talking about. So in terms of what you're doing, how are you working with clients? Have you got to the point where you're working with clients? And what's the sort of approach that you're taking?
Well, like you said, I think the only way to build digitally native products today is to look outside in, right? Is to look at customer first and customer journeys first, and only then see how you connect that to your legacy, right? By connect, I mean in a broader sense, not just in the technological sense, but rather what can you leverage versus how do you decouple and what needs to be decoupled? Because when you start inside out, you kind of immediately limit yourself and constrain yourself by what is possible and available in your core banking systems. I think that's a fundamentally wrong approach. That even limits your thinking to the fact that you only have one core banking system, or only the same core banking system you have today versus having potentially other ledgers serving better for a different purpose. Once you start outside in, you suddenly realize, okay, I hit some limitation here. How do I solve it? And you typically have more than one ways to solve that. Our architecture is fundamentally based on this decoupling principle, where we treat all the downstream systems, be it core banking, card management, CRM, all other systems, as a system of record. This is not my terminology. It was invented many years ago, but I still believe that this is the right way to think about it. To me, monolithic versus non-monolithic is not necessarily a purely technological concept like one thing versus microservices. To me, monolithic versus non-monolithic is understanding how to encapsulate certain systems for the purpose that they serve, and then have other systems serve other purposes. What I mean by that is core banking systems are systems of record. They are not systems of engagement. They are not customer-facing systems. They were never designed to be customer-facing systems. So basing your experience on what is available there is just fundamentally wrong. It needs to be decoupled from the start, not because core banking systems are bad, not that. It's because core banking systems are designed as a systems of record. They are designed to process transactions faster, serve banking products, but not necessarily to provide experience, because it's very difficult to design a single system that does both things in the best possible way. And that's, to me, monolithic thinking versus decoupled thinking. And whether your decoupling is microservices or something else, that's not so relevant. What is relevant is there is a decoupling.
What I want to ask, I guess, is how some of the changes in technology really affect the experience, right? Because my concern at the moment, I guess, is that still there's a lot of legacy. I kind of understand this thing about the systems of record, right? Now, a long time ago, when I first started in the bank, we just switched from literally like indexed flat files to relational databases. That was in the late 80s. And that was a massive change because suddenly we could, on scale, like query the database, obviously not for reporting purposes, but for transactions, it was much easier and faster and more scalable. But fast forward till today, and those relational databases are still there. And now we have databases that actually are a fundamentally new approach, I guess, in that they allow us to have scalable queries on the transactional database in real time, in situ. Whereas in the past, we've had to do that offline in a data warehouse. Now, the reason I bring this up is not to confuse Dave, but because clearly, what we were doing from a marketing and experience perspective was offline in the past, and now it's online and real time is the possibility. But for many banks, these experiences can't be personalized in real time. Do you see that as an issue? Is that something you resolve, or what's your view on that side of things? Because clearly, as Dave has found out from his experience, that experience is driven by the data itself.
Exactly. Data is obviously at the center of that. But now I think what changed is that previously technology evolved from modeling data as one thing, right? Here's a data model. You can either store this data in index files or later in relational databases. Now we can also have scalable relational databases, but fundamentally we are still talking about one single data model. And that is a bit of a challenge, right? And what changed now is that data became cheap, storing data, not the data itself. That means that we can store data multiple times and create models that are built for purpose. So instead of having a universal data model that serves both the system of record and system of engagement, now we can suddenly have completely different data models that are designed specifically for purpose. So where you need to execute transactions fast and calculate interest rates fast, you have a particular data model. But where you need to do transaction statements queries and financial insights and all other things that are much more relevant to how customer experience that data rather than how it is stored and processed, then suddenly you can have a completely different data model. It can be denormalized. You don't necessarily need a relational databases there. And new technologies and patterns like data mesh, like event-driven architectures, enable us to transform from one data model to another data model in a near real time. So that kind of creates that decoupling in the first place, but at the same time still provides a near real-time experience, customer experience, on top of the original data that is produced in a system of record. I hope I made myself clear, but I think that's one of the important changes here.
So I guess simplifying that from a non-technology perspective, basically we've gone from a transactional experience to a real-time personalized experience with the new technology, right?
Correct. Exactly.
Because Dave and I, a long time ago, we were at the conferences for Broad Vision who were promising this kind of personalized experience, one-to-one marketing. That was back in the late 90s, early 2000s. And actually, they weren't able to deliver because the technology wasn't quite there for it to scale at a transactional level. But what we're saying is that that's the shift. Are you working kind of in that space? Is that how you're helping banks to move to the next level of digital banking?
Indeed, yes. We are saying, of course, core banking modernization needs to happen, right? Banks need to look into modernizing their core banking systems, but it's not a binary decision. It's not a decision of replacing one core banking system with another one. And it needs to start with the experience like we discussed before. So why not putting first a technology like ours that creates a proper decoupling between existing legacy, whether that's a mainframe system or any of the 20, 30 years old core banking systems, start building from there, and then essentially give yourself a much wider space for breadth and start looking at what additional things you could do in the core banking instead of doing that first. And then you can suddenly realize, oh, you know what? Actually, I get already relatively good experience. So that's no longer a one big problem for me, but I need much more flexibility in lending, or I need a completely different loan products that I cannot launch in my current core banking system. Can I then put another ledger on the side and use, again, our technology from Plumery as a seamless horizontal layer that creates experience on top of multiple core banking systems in such a way that obviously users and customers are not exposed to that complexity, right? They don't see it. And it's very easy to add as many ledgers as you need based on your actual specific problem, right? So that basically shifting the problem from one big fundamental issue with my core banking to a very specific problem. Hey, I need more flexibility to launch trade finance products.
One of the things which I think is interesting about what's going on is I think a lot of the banks themselves are sort of still stuck in the old days where the way they're structured and the teams they have are kind of very much silo based. And this is a new world in which you've got to kind of break down the silos. I don't think leading with experience actually comes naturally to banks. I mean, I think they talk about being customer first, but they're driven by money rather than customers. How are you kind of dealing with them sort of culturally? Because, you know, for you to be successful, you need them to think in a different way. And you're a technology business, but this is about kind of the way cultures work. So how are you dealing with that?
Yeah, so we are doing a little bit of a sort of side mission of digital product management propaganda in banking. What do I mean by that is I think the success of all these digital products starts with the ownership, right? There has to be a person who owns this end-to-end, and not only owns, but also got the right level of authority, decision-making authority, that's what I mean by authority, knows what KPIs to track, what metrics to track, and knows what success looks like, really based on best practices from digital-first companies. Because in banking, traditionally, product management is all about setting the right price and doing the right marketing campaigns, primarily in the physical world, putting banners outside. And that's not how world works today. Digital product management is just fundamentally different. It's not that. Setting pricing is probably the last thing they do, right? It's about experimentation. It's about, like I said, tracking the right metrics, knowing your engagement, knowing your acquisition, conversion, knowing your churn, understanding why churn is happening, all these nice things. So we always try to lead with that, right? We try explaining that to our customers, the importance of that ownership, the importance of a proper product management, not just assigning someone they call product manager and then not giving that person any authority. And it's also not hiring a product owner who is busy with giving tasks to developers, right? That's a completely different type of job. Like a mini CEO, right? Many people like calling product managers a mini CEO. I think in some ways that is exactly what it is, right? In terms of the scope of responsibility, the scope of authority, and the rest.
And I guess, look, we're 20 minutes in and we haven't actually mentioned the word AI once. We touched on data. So I have to ask the question. There's two questions I have. One, I wrote an article on AI is the new UI. Do you believe that? Will that be the case? And second is, how are you leveraging kind of AI in your technology?
I think AI has a great potential. That is for sure, right? There's absolutely no doubts about that. At the same time, it's very important to realize the fundamentals, right? How the thing that we call AI today, which is specifically Gen AI, because AI is a very broad area. And I think we kind of tend these days to kind of take Gen AI and generalize it to the overall AI. That's not necessarily the right way to do. So Gen AI is built on a very specific technological principles, and it has limitations. It's important to know these limitations and apply that technology to where it fits best. Very important to realize that Gen AI is built on stochastic principles. It's built on principles of randomness and flexibility in providing responses by design to make us feel more like we're interacting with a human being and so forth. It's not a bad thing. But that also means that for the use cases where deterministic responses are important, right? Financial advice, financial decisions, executing actual transactions that impact money, making decisions on loan origination, and all these things should be done very carefully. There has to be a person involved. So can we say that AI is a new UI? I think we need to get there. And I think we need to be a little bit more specific on what we can replace and what type of conversations we allow to happen and what type of actions as a result of these conversations are allowed versus where it still needs to be a little bit more, advisory/consultative versus really agentic.
Yeah, that's a super important point, by the way, which I don't hear often enough. But I was at a conversation a few days ago about like conversational AI in banking, and you're absolutely spot on when you say that there are some conversations you can't allow. Like, can you imagine having a conversation with a banking agent, let's say, and you're talking about funding a mini war in your local town or buying some guns or so. How do I finance this? Like, obviously that's not a conversation you want to have. It's surprising to me that it never occurred to me that we might want to not have some conversations about money as well as have conversations about money.
And then looking at the agentic story, right? Executing things, not just talking about things. So we recently had a funny experience with the agentic coding, software development using AI agents. And that's not just us, right? I've seen that quite a lot. Sometimes AI agent would just delete something for you and just say, oh, sorry, I just deleted that thing, right? Let me see if I can restore it. Now imagine similar type of mistake happens with your money, right? Sometimes it's not that easy to restore it. With the code, it's slightly easier because at least you have a source code repository, right? And things can be restored. Now with money, that might be slightly more challenging. So yeah, it just needs to be used for the purpose it was built, like understanding the limitations and understanding the design principles behind it. It's not a magic, it's a technology. Let's not forget about it, right?
New fear unlocked. I hadn't thought of that, to be honest with you. What do you do about repudiation when the AI is taken over?
I don't mind if your agent, Dave, sends me £1,000, like by accident. That's okay.
It's going to be 1,000. Yeah, it's not going to be worth £1,000. So I was going to make some comment around Bitcoin, but there we go. There we go. So in terms of your kind of delivering and how you're sort of working, so I'm kind of interested from the sort of partnership side. I had a UX design business. Are you working with kind of agencies and, I mean, obviously technology companies in terms of the clients that you've got? How do you kind of manage the way that things get delivered?
Yeah, so comparing to most of the vendors in our space, we are venture capital backed business that is focusing on product and platform, right? We really want to give our customers full flexibility to decide how they want to differentiate on top of our platform. That's also why we are one of the few platforms that are headless digital banking experience platform. Headless doesn't mean that there is no head. We do provide mobile and web applications as part of our technology, but our customers is completely free to do whatever they want with these web and mobile applications. Our focus is really on the functionality itself that is provided in the form of APIs. Now, whether they would like to hire a UX agency that will take our web and mobile application foundation and build on top, or they would like to build something from scratch, either using their own capacity or again, hiring someone, this is totally up to a discussion and it depends on a specific profile of a customer. We can also help with that, right? Sometimes the way we work, we call it a white glove service, where we actually provide a full service, but we obviously partner with others who are delivering that. We partner with trusted companies who we work with for years, not even just as part of Plumery, but also companies we started working with back in 2008. So we do trust them a lot. We can resell their services if that is what our customers would need. But fundamentally, from architecture standpoint, we believe that there are areas in the digital experience where differentiation needs to happen. And we provide full flexibility in these particular areas, right? Instead of trying to do white label or basically try to provide a solution that would be used as is, we say you can use it as is if you want. If you actually want to differentiate, maybe you don't want to differentiate from day zero, but if in 3 months you come and you want to start differentiating, you have full flexibility. You don't need to submit change requests to us, call us, or engage with us in any ways. You have full flexibility in these particular areas, while we still keep full service and full responsibility for the part that is provided as a platform, as a product.
So, Ben, you know me, I like to kind of look at the future. I mean, what do you see ahead? Like, not what you're delivering today, but like what's going to be the biggest changes in the next 3 to 5 years, do you think?
Well, 3 to 5 years, I think in our dynamic world, that's very long time.
3 to 4 months then.
Yeah, exactly. Let's see. No, I think generally the tendency will remain the same. Banking will shift from a pure financial services to a blend of lifestyle banking, built for purpose products like family banking and things like that. It will seamlessly blend services provided by other companies and other, let's say, providers to one holistic experience. And we see that a lot happening across the board. So that's one. I think the other one, like I mentioned before, on the downstream side, banks will shift more and more towards multi-core strategies and progressive modernizations. And this will open up even more opportunities for better products and better services for customers. I think AI will find a stable and solid place in banking, because right now we are still experimenting and trying to understand what the heck this AI is, right? And what it actually does, what it doesn't. again, Gen AI specifically. I think it will find its stable place. It will become more trusted as a result of that, because, regulators are always a little bit behind. And for them right now, I think it's a very scary thing. So, but as we will start, vendors and technology providers will start showing to regulators that, yeah, it can actually be used in a trusted way, not just all over the place, but in a very specific use cases, it will start finding its way in banking and will become used more and more. Yeah, I guess these are the most fundamental things I expect coming in the future.
Fantastic.
Just on the point of regulators and AI, I mean, look, it's no secret that I'm not a fan of the UK government and progress that, or lack of progress that we've had in, DeFi and especially AI. What do you think the regulators should be doing that they're not? Or do you think that they're okay with what they've done on AI and specifically in the financial services space?
Well, I think regulators, like pretty much any other area, they should become less siloed and collaborate more with businesses in early stages. The moment something happens, they should be proactive about it, right? Go learn about it from the industry, gather opinions, gather thoughts how they could possibly help and contribute, rather than being a policing function. That's, I think, a fundamental shift that needs to happen. Right now, it's a policing function rather than proactive function that protects consumers. It's reactive and it's policing. It's like, okay, if we don't know something, we assume it's bad, let's just block it out. That needs to change fundamentally. And that's not just UK, obviously, right? I'm not based out of UK, but all the countries I've been living in, I've seen exactly the same pattern. It's a consistent issue where governments are taking a stance of policing, except some countries, like for instance, Estonia is a good example where things are typically much more proactive and government is working much more like a commercial organization and trying to kind of learn things, right? And be ahead of a curve. I think there's a lot to be learned from them as well.
Yeah, I mean, I think Dave and I would add probably like the Middle East, because we've spoken to the regulators there and they were extremely proactive. And what was interesting is that when people say that the US innovates, China replicates, Europe regulates, their regulator basically said, we accelerate. Our job is to bring this stuff to market faster, but safely. I just love that.
Exactly. I think this is spot on. That's exactly the principle that should be taken. That's exactly the shift that needs to happen. It needs to be acceleration. They should encourage people to do things differently in a better way, but still keeping it safe. That's important. That's their function. But you can keep safe not by policing, but doing it differently.
Fantastic.
Brilliant. Any last words, Ben, before we go? I know we're at the end of our time, but any last bits of advice or...
No, thanks so much. Thanks, Dave. Thanks, Dharmesh. Thanks for having me. Thanks for giving me a floor to share my thoughts. Really appreciate that. I'm very much excited about how future will looks like. I'm sure there will be a lot of change in digital banking. We have close to 50,000 organizations that are either banks or call themselves banks or other types of financial companies. There's plenty of opportunity to innovate and modernize and do things better for people. And banking is also, it's a fundamental part of people's life, right? So by improving banking, we implicitly improve lives of many people.
Thank you so much, Ben. You are one of the leaders in this space. You have a track record which is second to none, maybe second to me. No, I'm just joking. But you're certainly ahead of me, that's for sure. But yeah, I mean, your track record speaks for itself, and we really wish you the best with Plumery, and thank you for coming on the show.
Sure. Thanks so much. Thanks for having me. Thank you.
Thank you for tuning in to Dave and Dharm Demystify. We hope you enjoyed the show. Don't forget to like and subscribe and tune in next time as we take another topic and demystify it.